Revival Gold CEO Hugh Agro is definitely no stranger to our program here, but we're going to try something new today. I'm going to be asking him questions and bring up some comments that you've asked on CEO.CA/RVG, which is Revival Gold's dedicated channel on our website. Hugh, it's a pleasure to be with you. Now, I am going to ask you some of my own questions first, so let's get through that together.
Sure. Great to be with you, Rachel.
Absolutely.
Yes.
So since we last spoke, it's been about 2-3 weeks. Gold has gone through extreme volatility. Bulls are confident, convicted nonetheless, while of course bears are saying that there's rough waters ahead. What are your overall thoughts here on what's happening with gold?
Well, of course, I'm a long-term investor in the space, so I recognize these opportunities as opportunities to reload. In fact, I've just bought some more shares in Revival Gold. And I do think that the long-term fundamentals, not just for the metal, but for companies like ours that have development projects in good locations, are outstanding. And in fact, we've seen some examples of that, a couple of transactions in the space, recently in Canada, also in the United States, Agnico coming into the US, not there just for one project. They will be there for a camp, I'm sure. This is their style and their approach. So some really good signs that the long-term fundamentals remain strong.
Well, in both Utah and Idaho, that's where your two key products are located, Mercur in Utah and Beartrack-Arnett in Idaho. Let's talk about Mercur first. The latest news shows us that you're hitting long intercepts here at this project. Why does that matter for a heap leach project's economics?
Well, what we're trying to do with the drilling this year, now 80 holes in, with 26 holes now released through the month of October, is that we've got the grade and we've got the kind of metallurgical recoveries that support our PEA going to a PFS and ultimately production.
And remind us, when is the PEA PFS planned for at Mercur?
So PEA came out in July, so these are relatively fresh numbers. But we want to now infill drill the inferred resource that's part of that PEA. And then we want to continue to substantiate the assumptions that go into that PEA. Remember, PEA is relatively more risky. It's earlier stage. As we move to PFS and FS, we want to continue to substantiate the assumptions that are in the studies and actually build on them. And in fact, that's what I think we're seeing here from our drill results released so far. Average grade of 0.7 grams per ton gold in the intercepts to date, relative to our resource grade of 0.6 grams. Average ratio of cyanide soluble gold to fire assay gold of 84%, relative to our recoveries of 75% in the assumed PEA study. So this is positive for us. A lot more drilling to come. 3 rigs underway there, and a busy crew as we head into this winter season. Things will get a little tougher for our team, but we're about 8,500 meters into the program with about 80 holes completed and more results to come.
Now, is there a scenario where your current resource at Mercur grows significantly because of this current drilling you're doing?
Look, I think we're focused on infill and de-risking. So those are the major priorities for us this year. But we are deepening some of these holes beyond where we expected to go. We're seeing a continuation of altered rock into lower horizons of stratigraphy. And that is positive for us because we're in a Carlin-type system. We've got a big land area. And if we can extend those lateral horizons of material, that could be very positive for us. Equally important, we're drilling on the fringes of the existing resource. In the last press release, we put out 3 grams over about 21 meters, right on the edge of the pit shell. I think that'll continue outside of the pit shell, and we'll follow that up next year.
And when we talk or think about Beartrack now, I understand that there's permitting work that's ahead or underway now, and there's active drilling. What do you expect to deliver by year end for Beartrack?
So we're really stepping out here with the drilling at Beartrack-Arnett. We're pursuing, as you might recall, the underground opportunity. And so we got about 4,000 meters planned. And what we're looking to do is replicate some of those, 5, 6, 8, 10, 12 gram intercepts that we had at the tail end of the last program. We're on the south end of the deposit. And if we can extend the strike on that, we will be thrilled. It's also open at depth, And these are the kind of deposits that can extend down 1,500, 2,000 meters to depth. And we're only into this system at the Joss zone now, about 600 meters depth. So lots of potential to go further, both laterally and at depth.
Well, quick follow-up before we move on to community questions. Mercur, the pre-feasibility, what's the biggest question or risk that you're going to be answering here for the project?
Yeah, I think for us, it's, as these things go, it is a relatively low risk project, right? Open pit heap leach on a proven mining site. And we're in a dry location, which means the permitting aspects will be relatively straightforward. And we've got a very supportive area that we're in for exploration and mining specifically. And of course, generally in the United States, there's a resurgence of interest in domestic minerals production. So I think we're in really good shape here. And look, our technical team has done it before. So we've got a lot of experience on our team and with this specific location. So I'm feeling very confident about it. As we go into 2026, of course, we're going to have challenges and struggles on aspects of the plan. But broadly speaking, I think things are going along very well. We're working on infill drilling, on metallurgical, on permitting preparations. We'll launch permitting in 2026 formally, and we'll be aiming to get that PFS done by year end.
Mm-hmm. Well, my first kind of opinion from the community ties in here a little bit. You'll see why. Lauren TF said on your channel, quote, for context, the last time we traded at about 75 cents for the company, gold price was at about $2,000. We didn't have $20 million in cash and the catalyst that we have now. Your response?
Yeah, I agree. It's a huge setup for the potential in the stock. And we're working in interviews like this and elsewhere. In fact, we just brought on a VP corporate development and IR, a gentleman by the name of Scott Treblecock. Strong background in industry, just came off $1 billion transaction with Mandalay to help get the word out and build on the story that we have. We do feel we're at an inflection point here. And as you might know, as we get bigger in market cap, now sitting at about 180 million Canadian market cap, we start to attract those passive funds that buy into these stories and build from there. So we are at an inflection point. We do have the team in place to get out and tell the story in a wider, more intense manner. And through interviews like this, I think we'll be up north of 85 cents a share and back to really the place we should be in this environment.
Well, Arush on the channel also said that he's surprised that the stock hasn't moved up to at least 85, 90 cents yet. He says the stock will, quote, blow up soon, in my opinion. There's a lot of value here. Whether you've got shareholders like that on this side or that side, what's your response when people ask, okay, yeah, why aren't we where we want to be just yet?
Yeah, I think it's about getting the story out. We've spent a lot of time with the blocking and tackling, putting the land position together. We put out our PEA in July. We're now drilling with 4 drill rigs. The news will filter in. And the potential is outstanding. I agree. I think we should be north of that 85, 90 cents that we've traded at in the past. I think the high for the stock is about $1.15. So lots of opportunity to go from here. And as I mentioned earlier, we have the resources and we certainly have the intention to get out and make that message known.
One last question before you go from Lucky Strike 23. The question is, where will they get the CapEx to build these mines? CapEx is $110 million with an after-tax NPV at $450 million and 3,000 gold just to build Beartrack-Arnett.
Yeah. So our concern is we don't get a chance to build these projects. Trading at the value we're at today, we're very appealing for anybody looking for, a couple of U.S. projects, 6 million ounces resources, and the potential to produce in the first phase 160,000 ounces a year. So there's a many players looking to position in the U.S. right now. So that's our risk and our challenge to get out and make sure we get that stock price moving before someone does it for us. But the great thing about being in the United States and being on these brownfields low-risk sites is that there's a lot of capital out there. And we think there's a ton of interest from debt providers. We haven't done any streams or royalties at this point yet. So that's another slice of the balance sheet that we can access. And of course, we've got strong institutional support in the stock. EMR Capital with a 14% stake, Dundee Corporation with a 6% stake. And these guys love our team, love our plans for development of these assets, and are backing us 100% of the way.
Mm-hmm. Well, listen, Hugh, it's always a pleasure to see you. Thank you for being here.
Thank you for having me.